All right, guys. Good morning and welcome to another FX Markets daily data analysis. And first of all, I hope you all had a great weekend. Second, let's go into our previous week review, right? And then we move forward onto today and this week. This is a point I want to make for all of you that still listen or actually give room to consider to all those Furus promotions and gurus, trading gurus, that they promote all these huge risk rewards trades, all these huge win rate percentages. The truth is, you don't need all those things. And if you chase all those things, the most probable thing is that you're gonna feel like you're a failure, like you're not good enough, that you won't get there anytime soon. The truth, you don't need it. You don't need it. You only need a defined process and a consistent approach, right? If you let me show here. Previous week assessment, right? Plus 3 hours. Plus 3 hours, right? That it would be risking 1%, plus 3%. You say 3 hours, if we trade and we win on average twice, 2 hours per one trade, and we're risking one hour, right? This might sound like nothing, but consider that 3% would be 12% on the month. With this, you could have passed a prop firm challenge in a month, trading like this. Very, very low risk, simple approach, consistent approach, defined process, right? Now let's think about what would be this 12% on the year. It would be plus 144%. The best hedge funds give 25, 30, 40% a year. We're talking here about 144%. You would be coming to in the elite of trading, worldwide trading, right? And you may be wondering why, if it's so easy, why nobody achieves it. It's because you have to be in the probabilities thought process, right? And the probabilities and big numbers. You cannot focus on 1, 2, 3 trades. You cannot focus on 1 month. You need to focus on the big numbers. And when I said big numbers, are the stats beyond a few single trades, right? So if you see here, we had a win percentage of 50%, half, right? And we still managed to do 3% on the week with a 2.01 profit factor. This is great. But most of you would think that this is not enough, or this is low, I need to do more, or this or that. No, you don't. No, you don't. So take that pressure off of your shoulders and focus on consistent approach, consistent execution of your process. And this will be a result. You don't need nothing else. Absolutely nothing else. Okay, now let's move on to what happened last Friday and last week, right? By the way, remember that these results are over the worst week in matters of probabilities. The less probable week to make profits is the week that gets together interest rate decisions and NFP. Bear that in mind. Now, let's move on. What happened last Friday? We had NFP coming way weaker than expected. This implies that the Fed will really consider in cutting the rates. And what happens when rates are cut? The currency gets less attractive, so it depreciates, right? So these results push traders into shorting the dollar. So we can expect for the dollar to drop in the next few months at least. All right. As I wrote here, see, now we have a 90 to 95% of probabilities of a cut by September, right? And 65 to 100 BPS of cuts by end of year. That's hugely bearish for the dollar. So the most probable, even that we trade intraday, we need to have really present what the bigger picture is, right? And now the bigger picture is really bearish for the dollar. We'll see how it goes. Now let's go with our process. All right, let's first step. We go to the economic calendar, right? Let's move here. Boom, economic calendar. What do we have for today, yesterday, and today? Absolutely nothing. So let's. No, we don't. Actually, I don't need to screen cap this. Okay, let's go here and nothing. Nothing. Now let's go to the heat map. Heat map. I definitely need to improve my dynamics with the laptop, because the alt tab, I don't know why it's not working correctly. Okay, so what do we see here? Give me your feedback. Yes, exactly. We see a Swiss franc completely bearish, right? A dollar mixed. And what do we see as the strongest one? That is actually not the strongest, but is weakly strong. The Aussie, right? So what will we trade? If you remember what we traded last time, we will trade again. What is this? Okay, I don't know what that is. But we will trade again the Aussie CHF. So strongest Aussie, EUD. Weakest CHF. We don't have that many choices, right? The JPY is the second weakest, so we're gonna put it just JPY. Yeah, that's it. Okay, let's move. Check the Dixie. Okay, let's go to the Dixie. What do we have in the Dixie? So before checking the Dixie, the technical outlook of the Dixie, what are we expecting for the Dixie to behave? What are we expecting to see, right? I know you all already checked the charts, but yeah, we are expecting weakness. This is Friday's NFP. Look at this huge bearish engulfing candle, right? It almost engulfed 3 candles. These 2 for sure, right? All right, let's go to the lower time frames. Let's go to the 4, straight to the 4. Straight to 4. Yoo-hoo-hoo. Technically, right? If it wasn't supported by fundamentals, I could expect like a really yeah. For me, the highest probability trade would be for this to do this and blop, you know, because we can see this, we have a QM, right? Boom, and here it will be a perfect QM. Okay, but we're not expecting that. And why is that? Because this was fundamentally driven, so the most probable short-term price action, it will be to continue going down. Let's check in the 1 hour. What do we have? This is beautiful. Look, it barely tried to come back and was rejected. But it was during Asia, so I do expect a little upward moves before continuing the move towards the downside. So we're not going to look to trade the dollar yet, but we are going to do it, right? Because look at the dollar. Now it's mixed, but tomorrow it's going to be all red, the day after tomorrow, the day after tomorrow, and the day after tomorrow. All right. Order flow, ultra bearish, but way oversold due to Friday's NFP. Yeah, okay, ultra bearish, there you go. Now, which pairs are we going to? Now we're gonna set this straight the orders. Which pairs are we going to scan? The only one that we care about, right? If you remember, on Friday we traded exactly the same, but we took profits. Actually, we didn't take profits. We closed the trade as we said we would before NFP, right? Half an hour before NFP, and we did it perfect. Because it was a 0.8R, right? But look what happened after. Look what happened on NFP. Boom, boom, right? And let me explain you something. Why do we close trades before these huge economic reports? Let me have a mate first. Two mates. All right. Why we do this? We do this because, let's say, our stop loss is placed right here, right? Boom. Usually this move is a very violent move where brokers open the spreads very widely, and also many times this is a gap. This is not a price moving downwards point by point or pip by pip, right? Even more when news with the numbers are shocking or are way weaker or stronger than expected. What happened with your stop loss? It doesn't get respected. If price jumps here, your stop loss order is going to be executed here. So all this not expected loss, you're going to be taking it. So if you were risking 1 hour, right? 1 hour, you may that's not good. So if you were risking 1 hour, right, you may end with minus 1.8 to minus 5 hours. It depends on how tight you were placing your stop loss on or whatever, right? So it's not worth it, basically. It's not worth it, okay? We don't do gambling, and that would be gambling, right? We don't know exactly what the result is gonna be, so why bother? We have all the rest of the days to trade and to make profits. It doesn't make any sense, period. We go out and we enjoy our kids, we enjoy our families, we enjoy life, we enjoy sports, we enjoy growing, developing knowledge, getting knowledge, developing skills. All right, so today we're gonna trade this pair again. Wow, look at this. That's interesting. That's interesting. Why this happened, I have absolutely no idea. Let me check Forex Factory. I don't think there was. Oh. So why the economic calendar didn't say that CHF? I don't have CHF here. So, yeah, we have Switzerland right there. They don't care about CPI. Swiss CPI. Okay. So Swiss CPI came 0.2 2% better than expected, and that's why we had this. This is even better. No, this is not better. This is not better because the CHF was the weakest one, and now we see that there were good news for the CHF. Okay, now we're going to do something that we don't usually do, but it's worth paying attention to, and that's looking at the futures. Okay, even so that the futures market hasn't opened yet, right? But just to see how the Swiss franc closed last week. Alright, interesting. Look, completely opposing to the dollar, of course. Let me check the daily. So we see that in matters of COT, the Swiss is being bought. And what do we expect? We had a bullish. No, but this is Friday. No, this is Monday. Okay. Market. Okay, so we had a bullish gap. We had a bullish gap. All right. DCHF. Let's go back here. Well, this prediction wasn't that bad, right? Are we expecting for it to go here? Let me see, 12 hours. So what do we have? We have a clear range, clear consolidation, right? Look at this. Look at this. Let's put range. Where is the range? Oh, look at this. All price action. And we're nearly the upper band. Are we expecting a breakout? Considering we have no news, no nothing. What are the Americans going to trade? How are they going to react to the CHF good CPI numbers? Good question, right? Good question. All right, so we have a clear. Let's go to supply and demand, right? A clear analysis here. Boom. Let me start deleting this. This template. Send this. So we have a rally-based rally. We go to 3 hours, 2 hours. 2 hours is pretty clear. 1 hour. All right. So this was already consumed by the news, so we cannot use this, right? This week got all orders here out of the market. Let's go to a 15 minute. If we don't have anything to trade, we're not going to force it. We're definitely not going to force it, okay? We can wait even for New York. I'm not going to put an order just to put it. And to be honest, I don't like this. So I don't like this. I don't like how it's against how the futures are behaving, and if we're thinking about longing Aussie against Swiss and the futures of the Swiss are appreciating, that would imply for this to weaken, right? It makes no sense. Technically this I don't know why it's not loading here. Okay, let's go to 1 hour. Did I lose? Okay. Oh. Okay, there we go. This actually looks bullish, right? And this would be Let's say we're bullish. We're really bullish on this. Let's see our profit potential. 15 pips. To be honest, this could work. This could actually work. Okay, let's put this trade. Let me check the 4-hour too. Yeah, let's put this trade. I actually like this trade, and you know, let me give you the explanation. First of all, I think maybe there. Yeah, this is gonna be my trade. Let's go to 1 hour. Okay, let's put the invalidation. It gets to take profit without us. Period. We remove the order. What we would like to see would be something like this. Boom. This would continue. We would get to the upper side of the. This is the upper side of the range, right? So if we break out, I see this low probability. I see more this happening again. Boom, and we go, and we go, and we go. Okay, so we're gonna set this order. Actually, the profit potential is there. If we see the 4-hour protection is there. The 15 minutes, it's there. We have a huge consolidation with the sweep, liquidity sweep, or call it whatever you want, right? Let's move this here. Boom. So there's no need to go back down here. Currently we're 15 pips away. 15 pips away. Let's see what it would take for in matters of retracement. Like 62%. It will already take us into the trade. So yeah, I like it. Okay, let's go with this one. Let me share the values, and then put the orders here. So we're gonna go AUD-CHF. It's 0.5220, 0.5220, 0.5206, and 0.5250. We also have that, right? 0.5250. It's a round number, price magnet. Okay, open trade. Okay, guys, I'm gonna do a screen cap of this. This is Swiss, and I'm gonna put this like this. There we go. Now let's go over expectations and management, right? trade to be closed by New York Open. Management at 1 hour, move stop loss to break even. Why? Because this is not the highest probability trade. It is a high probability trade, but it's not the highest. So we don't know how the American guys are gonna take this. So we're gonna trade what it is. If by New Year Open we see nothing has happened or anything, we delete the order and we move on. We don't need to rush. We don't need to force absolutely anything. Okay, guys? Okay, so that's it for today. Stay safe, stay strong. Trade your plan, right? Follow your rules. And wishing you all a great day. See ya.